Good afternoon. Well, thank you very much for having me here today. My name's Philip Day, CEO of ScotGold. I've been working for the company for a year, and I really would like to take you through the experience it's been like in the last year, because it's been extremely exciting. And as the slide suggests, we're in a really wonderful position, ready for growth. Sorry. So 2021, as a snapshot of where we are now, we've been developing the Cononish mine, which is eventually going to be 23,500 ounce gold production by Q1 of 2023. But it's a high-grade, high-margin mine with a centralised processing plant. It's got really compelling economics and is forecast to be at 544 pounds per ounce once it's in full production. As a result, it's been quite well cash generative with an expected revenue of £30 million per annum once we hit to phase 2 with an EBITDA of £21.5 million. It's got really good reserve or resource expansion capabilities, and we will talk about that in this presentation as to the strategy we'd like to go through. And ultimately, we want to build a multi-asset gold production company in Scotland through the exploration of our 2,900 square kilometre licence areas. So what have we been doing? Firstly, through 2020 and into 2021, we've been optimising the value of the Cononish mine itself, and then we want to move into the growth and by expanding the regional exploration and in and around the Cononish vein itself. And we do this through our people and an investment to sustainability. And all of this comes through delivering long-term and sustainable growth and returns. All right, a commitment to sustainability. We mine in an extremely sensitive part of the highlands in Scotland. We take this extremely seriously, and as a result, when we made the decision to start the mine, we made some very sensible decisions in the way we designed the mine itself and the processing plant, whereby we took a higher capital and more intense and more difficult approach to tailings. So we decided to use dry stack tailings, which was no mean feat. It took us a good 4 to 5 months to optimise that area just in itself. But proud to say the operators and the technical people I have on my team were able to do that very, very effectively. And as a result, now we don't have any mounds, we don't have any eyesores, or don't have any of those piles that most mines would actually be used to. We don't use any cyanide, and we're probably one of the only gold producers that could actually say that. And we work on a national park improvement plan whereby we have to keep the pristine elements of the park exactly the same as they always were, because we also share the mining area with walkers and track people. And if we do anything that impacts on the visual experience that any walker can have on any given day, that is seen as a negative to us. And I'm glad to say, even through a ramp up and commissioning the hardest time in a mine's life and through construction, we haven't had one complaint. So 2021, we call this a transformational year. When I started in April of 2021, the mine was in some sort of position, I guess is the best way to say it. We ended up by having to spend 2 or 3 months redesigning the mine schedule for 2021 to make it profitable. Ended up by having to change some of the mine design to be cut and fill stoping to try to bring some value forward. But we managed to get through Q2 of 2021 through that. We then got into Q3 and into Q4. By the time we ended up by finishing the year, we had record concentrate production, and we ended up by selling our concentrate and achieving close to £3 million for that. And then went into 2022 and it continued on into the ramp up. We now literally 1 month away from announcing that we're at commercial production. Managed to obtain a loan facility through Fernworth out of Switzerland to help us in our expansion plans. And so from now going forward, it's just focusing on optimizing the process plant and to achieve more mine efficiencies and eventually get into stope mining. So we're on target for achieving 16.5 to 17,500 ounce per annum run rate by the end of Q2 going into Q3 of 2022. 2023, if we keep going at this particular rate, we will get up to 72,000 ounce or 72,000 run rate, which is our 23,500 ounce production run rate, which effectively will give us our 34 million pound revenue, and on a cost basis of 13, we start spinning off cash at around about 21.5 million per annum. So this is our Q1 sales highlights, just reinforcing what I just talked about, effectively just doing more and more optimization and more mine development. Going forward into 2022, with the loan money that we got from Fern Wealth, we'll be using that to do further optimization in the mine on our mobile mining equipment, do more expansion on our process plant, putting in thickeners and ore sorters, and from that down on the bottom square you can see a gradual increase going from 3,000 up to 4,500, heading towards our phase 2 run rate of 6,000. Right, as you can imagine, in underground mining, it's all about development. Development. If you don't have enough development, you just don't get access to the higher grade areas. You just can't selectively choose where you need to mine. You are pretty much at the mercy of what grade you're getting at any given time. So in Q1 of this year, we focused very, very heavily on developing from one side of the portal all the way through to the other. It was a very difficult quarter as a result of that, but we achieved it. We found some very high pocket grade areas, so we extracted that through a cut and fill stoping methods, and we ended up by finding 2 or 3 other areas. So effectively now we've got a very nice grade control model rather than a reserve or resource model to use for our mining, which just gives us a lot more consistency in grade and revenue. Again, just on a rotator view, so for people can see, this is how much development we've done through to 2022, and also what we're planning to do. In line with our mine, once we get our mine up to the phase 2 level of production, our process plant still needs to have one key piece, which is the ore sorter up front. It has a mill that is already capable of achieving the phase 2 level of production, as is also the crusher. The flotation and the tailings probably needs a little bit of tweaking, but one method to debottleneck the whole lot would to be an ore sorter. And if we're able to achieve that, it will allow us to do more resource drilling to expand our reserve and not actually have to change any of our permit conditions. So we think this is a very exciting opportunity. Right, so this gets into the nuts of where we are. We have got enough cash through our loan to achieve our phase 2 run rate. We can continue on doing that if we want. We've got enough money to put in the thickener, to the ore sorter, to do the drilling. But what we're really looking at is what's next. What happens if we actually start going out and exploring? We own 2,900 square meters of areas under our permits, under our licenses, that we can actually go out and explore. We've done minimal amount of work, or just enough through looking at chips and the like, but we haven't actually put any drill holes into these areas. But every single time we go out and do any geophysical, geochemical work, it just keeps coming up with all these very high grades, as you may or may not be able to see. So in summary, we're in production. We're working towards our phase 2 operation by next year. We're doing lots of low capex initiative optimizations to drive our production. And once we get to about Q3 of this year, we start stoping. We want to then move into growth and exploration to do some drilling and actually increase the potential of the resource and reserves, and hopefully therefore the LOM. It is a very high cash generative mine because it's so high grade mine. The reserve grade is currently sitting at 11.9 or 12 grams per tonne. As a result, we're expecting to be 30 million or 34 million at today's gold price, with an EBITDA of 21.5 per annum. And as a result, we think we're highly undervalued with we think a price target should be, as the number suggests. So very exciting mine. It's gone through all the hard work, arguably, and we're getting now into the very exciting part where if people want to get on board, they can get on board and start investing for the exploration upside. And thank you very much.